Good morning, it's Harvey Jackson from Producer Profit. Just going to go through a couple of slides of just canola oil export history from the USDA, and of course the top news items and charts. If you want to get this a little bit of tidbit of information every day, just find me and subscribe. But by the way, we'll just get into it here. So on the top, I have the Canadian canola oil exports according to USDA and with China and US, and you can see that there's a pretty good steady increase of US imports from Canada. But you can see that there's a couple of years back in here when there was actually trade restrictions with Canada and China, where they actually it really ballooned. That's during that trade war. Now, and we kind of got sucked into that with the Huawei situation there as well. And hopefully, our Chinese ambassador is not going to be brain dead like they were those years, and not allow that to happen. Like don't let them land in Canada, so we don't get pulled into a trade spat that we weren't even a part of. But anyway, let's politics aside, I guess. But and below here we actually have canola imports, so you can see those same years we went to they went to decreased numbers of imports. Now, tracking Canadian data, this is only U.S. data, and it's not actually tracking the what came from Canada. But you can see that we actually still exported like 3.4 million metric tons, and you can see that you actually end up getting split between China and U.S. So my thought process, and I've said this to a couple of clients, I believe November the election was won by Trump. His trade rhetoric was all in place way ahead that he was going to put on tariffs. I believe there's tariffs coming. I just don't know on what, and it might start off on everything. But the trade tariffs are going to be a real thing. He is going to uh, uh, have that as a definite impact on what's going to happen here. So if you're a exporter of canola oil or a crusher of canola oil, and it looks like there's only a couple companies that actually had their head not buried in the sand about that election, and it looks like they are actually making sales. So Richardson and LDC up in Yorkton have like zero basis in forward months and -10 for next fall. So they actually found some sales, and I wouldn't be surprised that it's actually to China uh, going away from the U.S. Now, that's not a definite thing because I can't see it, but you can see even here, European Union is kind of flat most years until there's a problem, and then they import more. Now, are they going to be an importer a greater magnitude when they have their production problem that they have for themselves? Because if we just look at the last few years' data, you say, oh, it's only U.S., but you have to get more data than that. That's all I'm saying. So um, here I've got the Canola Carry. I had a couple questions about this yesterday. So you look at how the forward curve looks. So you got the market is actually showing that there's a carry in the market. You can see 860 and then 1370, and then actually November is actually uh, uh, almost zero. But um, so if you do the math on the carry charges, so you got 12 cents per ton per day, and then your interest rates. So this would be calculating your full carry. So you got like 58% full carry using interest rates and 12 cents per ton per day. And if you do this with mini wheat, using their 3 cents per month, I think it is. And so it's just going to give you a daily storage rate. I'm just doing the math backwards here, but you're looking at in the 70s of carry on mini wheat. So it's still carry, but you can see that there is actually even carry to get into new crop. So you can see that March to December is 42 cents, and the full carry calculation would be 58. So you're still paying for a good part of your storage if you were to push it all the way that far. I'm not suggesting that. Bar chart had an article just talking about what they expected from the fund or from the Fed. So the U.S. Treasury will be announcing this afternoon what they're going to do. The expectation is that they're not going to do anything. Here in the RBC article, uh, they expect it to stay flat for this time, but they also expect the Bank of Canada to actually decrease by a quarter point. There's no consensus that the U.S. Fed will be decreasing. There's more interesting stuff that if you want to stop and have a look at this, but there's just your some of the economic data that's going to be coming out in the next little bit. But even this shift that we're going to get this morning could actually have an impact on the Canadian dollar, and you'll see that we're actually trending lower in the last little bit here as well. So canola is down, rapeseed is down, and you can see here, we'll see it in a bit here, the spreads are narrowing up quite a bit, or the spread between rapeseed and canola. and some of that is just the rapeseed just coming off, and canola edging up a little wee bit as well, or holding. Soybean oil is just shy of 45 cents. Palm oil traded up a little wee bit, and your crude oil is down, and your soybeans, your corn, and your wheats are all up. So a good day in the U.S. traded commodities here. So canola, basically flat, trading up against that 200-day moving average on the March chart. And when you look at it on the on the November chart, still looking like we're getting support. It looks like we're going to try to approach that uh, uh, high that we made back in the middle of January. And ultimately, we want to try to get to that value. But I would say we should be looking for any sales in this value, or even at 640, to get something covered for the first sale. So this is, again, anybody can draw a trend line, and the trend line on this is actually just your differential, and it broke the trend, or it's breaking the trend right now. It's showing $120 differential right now. Some of that could be because the Feb contract is coming off as well, and I have to readjust all of that as well. But we'll maybe look at that tomorrow. Here, the rapeseed, you can see I left this trend line on here. We broke below that, and if we just look at that last move in this last little wee bit, we're at the 38 retracement value. So and your 100-day moving average. So if this isn't supported, we could be getting down into this area as well. Where 23.6 would be the first one, right around $500 rapeseed price. Soybean oil still basically going sideways here with a slight downtrend in that sideways pendant formation there. Palm oil right at the 50% retracement value, and really not doing a whole lot until you get more data of shipping out of Indonesia or in Malaysia. Soybeans, it's a little bit positive, still in the uptrend, but we're still looking to get back to last week's highs. I am not that confident at this moment, but it's still well supported. As you can see that these, you've got soybeans, you should be looking at maybe capturing some sales. Here's the Canadian dollar in the minute chart. So this again was this is tariffs, no tariffs kind of scenario when the inauguration happened. So if there is tariffs on Friday or on February 1st, I expect it to probably fall apart. We could have a little bit more downward move even today because of the decrease in the interest rates, and find out what the U.S. Bank of Governor or Fed will do as well. So this is just a look of the Canadian dollar in the longer term. So I'm going to start off with corn today, and the corn soybean ratio. So I put a blue line right at $2 or the ratio of soybeans to corn. So soybean divided by corn, and a lot of people look at this, the median rate at around 2.3, uh, uh, or yeah, around 2.3% or whatever a ratio, and we're currently at 2.1. We're getting very close to some of these lower levels. They don't stay there very, very long, but you can just see where the median rate is, or median rate is, and it's we're getting to the edges of it, but you can press quite a bit lower yet. So just a FYI. Corn, when you look at the longer continuous chart, you have to you're looking at farther back here, at, where values were even in 22 and in 23, and we're trying to approach some of those values as well. Here's on the daily chart. So the next level is probably in this 507. If we can push up to that, we can be looking in that 540 range up here. December corn, not quite the same look. It's got a lot, it's staying in the bottom with that inverted from one crop year to the next. That doesn't mean that when we get some good values on the front month, that you don't make some sales here as well, because this may stay inverted for a little bit. Here's your spring wheat. We've had a couple good candles yesterday and today, trying to get back to values that we had just last week. Uh, it's always a good thing to be above that $6 mark here, that's for sure. And then if you look at the December 25, you're at 645. So you get $6 minus the 645, you get a 30 some cent carry for wheat to go into new crop. Here's your Kansas, and those same two candles, but a little bit farther to go to be able to get just the last week's highs. And the same thing with Chicago wheat. And here I'm just showing live cattle, and I think everybody that has cattle, they know that this is a pretty high value, and just know that when you get to that kind of value, there's usually a pullback of some sort. I don't know what it will pull back to, but it just here's your long-term chart since the 60s basically, and it's we have not seen these kind of prices. StatsCan next week, February 7th, or yeah, February 7th coming up. I'm not certain what to expect on that one yet. And then a few days later, February 7th will be the USD crop production. That's all I have here today.